Okay, welcome everyone. Welcome to my stock market technical analysis video. We're going to do an early morning review just to cover kind of what's happening so far this morning. We'll go through the main stock market indices. Again, everything in this channel is using technical analysis. So I have a specific way of going through that, and hopefully that adds value and helps your investing and trading. Give me a thumbs up if you find value in the video. And check out my stock market technical analysis training course. The link is in the description of this video below. It's a $99 course for about 5 or 6 hours of training. I go through all the charts and what to look for, how to use specific indicators. It's a pretty good course, especially for 99 bucks. I think it's very accessible to the masses. So thank you all. Let's get into it. We'll start off with triple Qs. All right, couple things on triple Qs. The things to really watch for, if I go to the daily chart here. So on the daily, we had this, the main point is looking at the bigger picture, and this green wedge right here was a bearish rising wedge, all right? So that's a bearish pattern. You look for a break to the downside of those patterns. And at the same time we had that bearish pattern, we put in negative divergence where the momentum kept trending down. So that has not changed. The momentum is still trending down. We haven't, made a new high or anything like that, kind of burning through this divergence. It just continues to trend down. And now we're starting to see price trending down too, because we got a breakdown of that bearish rising wedge. See how I have it circled right there? So there's your breakdown. And we made our first leg down. We've had a bounce here. I think there's probably another leg down. That's kind of what I'm looking at. Maybe an ABC correction, maybe more. You never know how much more you're going to get. But typically you're not going to see just a drop and then a bounce and then off to new highs. Now that could happen, but what I'm looking for is signals or signs that this downtrend that started back here on this breakdown is finished. And I don't see any of that. Price simply moving up is not an indicator that a downtrend is over. Okay, prices in a downtrend, prices will bounce as you fall. You'll have areas that you bounce off of, and then you'll fall more. So until we see signs that they're of a reversal, then I'm going to stick with the trend, which is down, at least in the short to intermediate, intermediate term. So what am I looking at? Well, I think right now, if you go to the hourly, we're kind of stuck in this range right here. We have a midpoint of the range, which is right here at 315.75. The lower end of the range, which is about 311, and the upper end of the range, which is 324.50. All right, so right now we're bouncing off the midpoint of the range. We could bounce up to the upper point of the range. That's completely possible. Still doesn't change the fact that I think we're still going to head down lower and make another leg lower. I do think it's likely we're not going to get back up to the upper end of the range, but of course that's possible. If we break to the upside of the upper end of the range, then perhaps we're not going to make that next leg lower. That's always possible as well. If we break to the lower end of the range, 311 down here, then I think we're going to head down to 297, the former bounce area, which was 297.44. Look for a break of that. We'll probably get a small reaction there, but look for a break of that and head straight down to, about 285 right in here. All right, so that's what I think is going to happen. Obviously, anything can happen. I think we're heading down to 285. But of course, watch these levels for potential breaks to give you clues on where it might go. Okay, SPY. So SPY's just trading off the all-time highs. It's not too far off the all-time highs, and that's one of the reasons why I think there's more downside to come, because we haven't seen any correction in the broader index. And so again, I'd like to see that a breakdown in the broader index. Let me clean some of these lines up. We have a bearish rising wedge right here in green. That was your bearish rising wedge. And if you look at it, we basically broke down, we back tested, we broke down again, we're kind of back testing. We're not breaking down, we're just kind of hanging in there. I think it's likely we're going to start to roll over, but again, until we see it, if you look at the daily, we have this negative divergence that was building for quite some time on the SPY, on both on the RSI and the PPO. So pretty much all of this price action right up in here was all divergent high price action, going all the way back to November of 2020 or so. This was all divergent high price action, and we haven't seen that actually play out. Now, it hasn't been negated or burned through. You haven't made a new high in the RSI momentum. You're just continuing to kind of extend that. So if we run up and make a new high anytime soon, that's going to be just another divergent high. And you're just extending this negative divergence, which tells me that those divergent highs will fail, and you're going to go lower. I don't know if we're going to get a new high, or if we're just going to start to fail here. But the negative divergence tells me that we're likely going to move lower for a trending trade, and it's better to look for that than try to catch a marginal new high, because the risk reward, it's all about risk reward, right? If we go up and make a new high, maybe that's a 1-2% upside, breaking above these highs right here. But if we drop, we have the potential, to probably come down to this trend line here. It's a 10% drop. So that's a 1 to 5 risk reward ratio. And obviously, you want to put the probability in your favor. So the downside looks like the trade to me right now. And so, yeah, watch for a breakdown in the SPY. So IWM's already started to break down. This trend line right here on the daily chart is what we were watching right there. See, we're walking up that. We had a breakdown here. I took that breakdown. That was a false breakdown though, and so as soon as you realize that's a bear trap, you get out, and then we made a marginal new high, and now we have another breakdown. This new high right here was a divergent high. See how it was made on less momentum? So we put in negative divergence of the IWM right there, and we did not have that before. So basically, now that you have negative divergence, you made a marginal high, and then you've broken the trend. This looks like the real deal to me, and I think we're heading lower. So I believe we're likely heading down to this lower trend line, which comes off the March 2020 lows. You can see we held support there, held support right in there, and to come down and hit that again would make a lot of sense. Potentially breaking that, but we're likely, that's going to be the spot where I think we likely get our next kind of multi-day bounce, maybe a couple weeks worth of a bounce. But I do think we're heading down there. Right now it's about 201, 203. It depends on when we get down there, of course. But to me, I don't see I see no change in character of this chart that tells me we're not heading lower. Bouncing a little bit today from yesterday. But look, the bounce is muted. You can see the bounce. They gap it up, kind of try to move it up, and then they sell it off. You can see this hourly candle, they run it all the way up here and sell it off. So the rips are being sold is what I'm saying, at least on this short hourly chart. This obviously can change, but that's what that big wick is telling me, that as that was ripping higher, they sold into it. So to me, this looks like we're going lower. So financials all broke trend as well. So here's your trend line on the hourly chart in financials. And we broke here. Okay, sorry guys, had to take a phone call. XLF is, the point on XLF is you had a trend right here. It broke. We got a sell signal, and we should trade down likely to about $30. That's kind of the area that I see some support. It might fall here. It's from this trend line, which is coming off the 2011 lows. This is really the bull market trend for the financials. Back in 2009, it was crashing. We got a kind of a bounce off the bottom, and then it formed a trend right here. We didn't know it was a trend back here in 2011, but in hindsight, you now see the trend. So we track that trend now. So you have lots of support. We hit that. We broke that support as I zoom in here. We broke that support there in the COVID drop, back tested from below, and we've recovered that now. So you can see there's a recovery. We're bounced off support and ran higher. But again, there's your trend line. We broke that. Pretty impulsive breakdown. 3 days of selling with, a reversal doji up there at the top. And so that looks like a good sell signal. So yeah, we're probably going to bounce a little and continue to roll over. So down here, it would be the next area of support, down around 30 bucks. Also on XLF, we had negative divergence here on the daily. You can see it clear on the PPO there. And the RSI made an equal high, but with much higher price. So that's negative divergence as well. Gold's still in a downtrend. That's obvious. You can see here that we have been in a downtrend really since back in August of 2020, and it's been just trending down ever since. That was, on this channel, I basically sidestepped this entire downtrend because I looked at it, looked like it was a good downtrend, and there was no reason to stay long this thing. Again, I buy gold miners, so a lot of the gold miners ran into major resistance when we spiked right here on gold, and that's where I took my profit. I've now started to cycle back into the miners. Yes, we are in a downtrend, and I don't necessarily see signs that we're going to reverse this downtrend on gold bullion yet. However, we're starting to build that case. Now, if we run down and make a new slightly lower low below this previous low, and we do it anytime soon, then we'll likely have that bullish divergence, which we don't really have right now on gold. We don't have bullish divergence. We have negative momentum. Basically momentum is, if I just mark it out to show you, momentum's basically moving down. You can see how, we're just trending downward and price is moving down. So everything's down. And I don't see any signs yet of a reversal in, any kind of bullish divergence. I see right here, you can see that momentum's kind of moving up on the short term. And price is moving up. But that's not a reversal signal. That's just convergence. That's price and momentum moving in the same direction. Usually to see a trend reversal, you want to see a divergence where price and momentum are moving in opposite directions. So we don't have that yet. So it is completely possible we come down, undercut these lows, and put in a bullish divergence. I think we're getting near the bottom in gold, potentially, but there's potentially some more downside in gold. The gold miners, some of them look a little bit different though, however. You can see here, if I just go to like some of these, like sand, all right, sand has clear bullish divergence where right here, it was moving up, momentum's kind of moving up, making equal or higher lows, and price was continuing to diverge lower. So all this price action down here was divergent lows. We then broke to the upside of this downtrend, and we're above that still. We're just kind of coming in for some back testing. So the miners, some of these miners look like they're already starting to make the run higher, and that happens a lot. The miners can run ahead of the actual metal, and I think that's what I'm seeing. That's why I started buying the miners a couple weeks ago. Not all the miners look like that, but many do. Here's Barrick Gold. You can see bullish divergence right here. See that? This was a divergent low. I circled it right there. And you can see how it made a higher low on the momentum. So yeah, bullish divergence. We've broken out. This is a bullish falling wedge. We broke to the upside and we're back testing. All right. So we're holding that support. We broke out and we're holding support. So in general, this looks good to me. What I think happens is we bounce off of this. I don't know if we bounce from lower prices, but I think we move off of this and start to trend higher over time. Couple trade ideas for shorting, really. And again, I've got a lot of, I just covered some gold mining longs, but I see more opportunity, at least in the near term, for shorting stocks, especially these high-flying tech stocks. These are the COVID stocks that everybody was plowing into in 2020. Didn't matter which one you bought, they were going up. And now I think that momentum is now, it's shifting to the downside. We've already seen breakdowns in most of these, and I think so. We've seen kind of the first leg down. I think we're getting ready for the second leg down, maybe the last leg down in these things, but I still think there's more downside. PayPal You have an uptrend coming off the 2020 lows, creating this bearish rising wedge. We broke to the upside right up here, and that's a low probability area when you break above a bearish pattern. It then broke and failed back below the pattern. You can see we had a little bounce, but we're starting to kind of roll over. You know, they're fighting, but there's the trend hasn't changed. We're still going down. You know, so a break below this 225.75, making a new low, will clearly set in a new trend where you have a series of lower highs and lower lows. You can see we've already, you know, here's a low, and we had a lower high right here. We made a low, but we didn't make a lower low than these previous ones. So I'd let you know, you break that, you're now trending down. But again, by the time you get down there and you put in a new trend, you're going to be right at that 200-day moving average, and you're probably going to get a bounce. So it's, you know, you have to take the trade before the trend shows up, because usually you're kind of late to the party by the time it shows up. This was your sell signal right here in PayPal. So we broke, ran down, hit support, we bounced. Now I think we continue to roll over. No negative divergence though in this one on the daily chart. You can see it's just not there. So it's not my favorite because yes, the chart looks good here, but the indicators aren't there telling me that we're getting, you know, negative divergence. We just don't really have it there on the at least not on the RSI. Yeah, it is on the PPO. If you go way back, you know, way back here, we do have it. That's a pretty big negative divergence, but it's not there in the RSI. So not my favorite. Let's look at one that looks a little bit better. Snap. Here's one that you have. You basically just have this rising price channel here, and you have this support line, and this came off the gap back here in October, and we're looking at a daily chart. We have lots of reactions along this. Broke down once, they recovered it. That shook out anybody that was short, basically, that took that initial short. They likely covered and got shooken out, and then boom, it breaks again. This looks like the real deal to me. We also have big negative divergence on this daily. See how this is just trending straight down? Each high has made a lower high, and it's making lower lows. So momentum is trending downward, and while price was moving higher. So you look for a break of trendline support, which is right. You know, we obviously had it here, but here's another break, and we're seeing continued selling. So on this one, I think we head straight down to the 200-day moving average. We're probably going to get a bounce there. That will likely come in, you know, I don't know, right there, 39 or 40 bucks. I don't know when we'll actually get down there. But I think we'll bounce there, get a little bit of a bounce, and then continue to roll over time, running down and getting close, potentially filling this gap at 29.15. Whether we fill it, I don't know, but I think it's likely that we do fill it. But you know, if you're going to short this thing, you know, you don't have to wait for the complete gap fill. Just step in a little early is what I typically do, and cover your short, you know, prior to filling the gap. But more selling today on this one, down 3%. Looks like there's going to be, you know, more selling. AMD, this one still looks good, coming off 2016 lows. You have a clean uptrend with 5 or 6 reactions, so a very solid trend line, very established. Broke trend here as I zoom in, back test, and we're, you know, going down. It's not moving impulsively yet. Again, usually when you're starting to break down from a trend line, there's a lot of people that don't know that we've broken, and there's a lot of buy the dippers, and it doesn't usually start off impulsive. It usually starts off kind of mild and just kind of grinds lower, and then as more and more people realize that they're taking on more and more losses and the trend has changed, more and more people bail, and then it gets more impulsive. This one I have circled up here. This is your negative divergence price action. See how the momentum dropped off a cliff right there, and it's just going straight down. So as we popped up here, these were divergent highs. Prices making slightly new marginal highs, and yet on way less momentum. So those have high probability of failing, and they did. You know, we've dropped from here. Doesn't look like much. The moves that I show you, when I show this chart, I think everybody thinks, oh, well, why not just be bullish? Because look, it's just straight up. I'm using log scaling. And yes, we haven't got much of a sell-off, but you know, when you take away log scaling, you can see that this thing kind of went parabolic and it's just starting to come down. So if we run down and fill this gap, let me go back to log scaling, which here's where I think this is heading. At least, there's good support right here at about 59 bucks. And so I think that's where we're going. All right. Well, on this chart, it looks just like a little drop. You take off log scaling, and it's a bigger drop. From the high, you're coming all the way down here. It's visually looks like more of a drop. So don't get confused by the log scaling. If I measure out if you took the sell signal right here and you write it down to the drop, that's a drop of 26%. All right. So that's a pretty good fall. 1/4 of whatever you have being sliced off the top. Apps, again, this one continues to backtest from below trend. So here's your 2020 trend line right there, walking up that. We put in negative divergence, so these were all divergent highs, pretty much all this price action. Then you zoom in, you wait for a break of trend. There's your break of trend. We hit, there's your first level of support. There's a gap right here. So we can't, and we actually had a reaction off of it previously at 65.30. So we undercut that a little, but it snapped right back and recovered it, and we bounced off that support. Now we're just back testing and starting to fail. Doesn't mean we can't continue to back test, but ultimately, I think we head down to the support, probably get a very muted bounce, if any, the next time, and head straight down to kind of this area. It's not as solid of a trend line support, but it's kind of in this 43.20 area. The 200 days right down there, so it's probably going to run right into the 200 day, and that's where we'll find some support. From where we're at now, that's a drop of about 45%. So again, it's a big drop. Doesn't look like much on this chart, just moving right down there. But if I take off the log scaling, it's all the way down here. It's basically, looks like a crash from a arithmetic linear chart. But again, we use log scaling. That's the professional way to chart. Zillow Group, ZG, we have a head and shoulders top right here pattern. You can see the shoulder, the head, the shoulder. Again, I marked this shoulder out before that shoulder even formed. I was just anticipating we might get that shoulder pattern, and then we did. We filled it out. Now what I would look for is a break in the neckline of 133. You get a break and a close below that, an impulsive breakdown. And you'll see it, if you're watching it through the day, it'll be impulsive. It'll start to really, break. Or it'll come in the form of a gap down. But if you... At 133, I think that sets us up for a move down to 89, 90 bucks. So that would be my target on that one. Obviously the 200 days down there, so you'll probably get a bounce off of that. We'll probably break, run into the 200, bounce back up to 133, and then continue lower. So this will take time, but ultimately, about 90 bucks would be the target on that one. But you got to wait for the break of that 133. If you don't get that, we could bounce and just head higher and just negate this whole head and shoulders topping pattern. NEO here, again, it's trending down. NEO's got a ways to go. I think NEO has the potential to get all the way down to this $8 area. What we got on NEO, a couple things. So you have a trend line right here on the daily. We just were walking our way up that trend line. When we started to get up towards the top, we put in big negative divergence. That really started to show up right all up in here. This was all divergent high price action, okay? And basically, you can see the negative divergence right there on the momentum. So you wait for a break of trend. There's your break right there. We broke, closed below it. Next day, gap way down. They, bought it at the gap, but it was still closed lower. So that's your sell signal. Nice impulsive break, bounced, did kind of a back test, sold off, bounced, but again, the bounce is making a lower high, and we continue to trend down. So lower highs and lower lows, that's how downtrends go. Slope of hope is another way to talk about it, where you fall, you go down and you bounce, keep people in the trade. They think, oh, okay, the worst is over. Then you roll over, you bounce. That's how it works. So we didn't even hit the 200-day right here when we sold. So I think, probably going to run right into the 200-day, chop around a little bit. But a break of the 200-day would put us all the way could put us all the way down to 22.29. That's the next level of support that I'm really looking at. I just don't see anything. There's a gap down there. So you see the gap. So I think you start breaking the 200-day, you're going to run down and fill that gap. Now you're likely going to get a bounce there, and that's a good target. That's a good profit target. If we break that level, there's two gaps all the way down here. You can see a gap at $9.33 and a gap at $8. We get down in that area, I think it's very likely we're going to spike down and fill those gaps. And that's a very big drop. From where we're at now, potential drop of 80%. All right, and that's very possible for this one, for this stock. So keep an eye on that. Okay, Tesla, and I'll probably wrap up here. Tesla's just been walking up this trend line right here. You can see we've had a reaction there. Undercut it briefly, but it snapped right back, and we're getting some more reaction. So a break of that, and it's about 658 right now. We're pretty much sitting right on it. An impulsive breakdown of that, and I think Tesla's heading down to next level of support, about 460. I do think we'll get that, and I think we'll get that break. I'm just kind of waiting for that breakdown. And Tesla has a ways to fall if it's going to start trending down. So it's extremely overvalued. Basically, doesn't mean it can't remain overvalued or it can become more overvalued. But when that momentum dies and starts to sell off, this has a ways to go. So we'll watch for that potential good swing trade on that one. That's all I got, guys, for this video. Leave a comment below if you want me to look at a certain stock. I'll kind of maybe take a look and gather up some interesting ones, and we can look at those. So leave a comment on any stock you want me to look at. I'm always looking for new trade ideas, new setups. If you got a long trade, state your case for it. Please, technically, fundamentals. We don't, that's not what we do here on this channel for the most part. It's, there's a little bit of fundamental analysis, but I want to see a case in the chart. Typically, fundamentals could be a good long-term reason to get long a stock, but doesn't mean you got a good entry price. Technicals will usually show us that. So again, thanks, and I'll catch you on the next one.